Now, on to today's market movers as pro traders take a look ahead at the jobs report coming out this Friday.
CME Group launched Micro E-mini futures contracts. Discover how a smaller Micro E-mini futures contract opens the world to greater trading possibilities.
Welcome to Market Movers. I'm Jim Murio with Scott Martin.
Hi, Jim.
Okay, so we have non-farm coming up on Friday. Okay, in the midst of a fairly historic Fed pivot from they were just in 3 tightening several months ago, and now we're pricing in 3 eases. What's best for stocks from this number?
That's a good question. I actually didn't expect such a direct, good one. And I still lost the fact you said historic Fed pivot because it feels like Fed from like 6 months ago. Yeah. I mean, anyway, I think the number, I hate to say it again, has to be kind of down the middle of the fairway in the sense that in that range, Jim, of say about 150K to maybe 200, doesn't upset the economic growth story, but with little in the way of wage gains other than what we've seen so far this year, that keeps the Fed in the game on the rate cuts.
So to clarify, a pretty good number, but not so good with wage gains that make us think the Fed might tighten.
Absolutely. All of us in the sense, including the Fed, yes.
Okay, now before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. When we priced this out, the S&P was trading about 28.22 after a couple good days in a row. Scott?
Yeah, a couple great days in a row and some follow-through too, Jim, with a little bit of volume here. I mean, volume's drying up a bit here as we get to these highs, but my goodness, I mean, you take a snapshot of a given day and you're looking at 50 handles in the S&P one way or the other, Jim. So today kind of have an interesting example to talk about that might help one express themselves maybe a little bit more cautiously as we go into the non-farm number. And of course, what I believe is probably going to be, some more trade rhetoric maybe in the future. So Jim, as an example, today I'm looking at buying the 2775 2800 put spread, my friend, for 6 ticks. Now, I'm not just going to do that and leave that out there. I'm going to try to pay for this a little bit. As you know, I like to do that because maybe I get a little bit appreciation price-wise. So I want to get something for it. So I'm going to sell a 2850 call, just naked, for 9 ticks. Now, both trades are going to expire June 12th, so we have a couple days after the non-farm comes out on Friday. I net 3 ticks by doing this, so about $150 I take in that I can take you to dinner on, by the way. But the risk is, though, aside from obviously the put spread being on, is that I get short at 2850, right? Because I sell that call and that comes in against me because, say, the market rallies past 2850 and I have that naked call up there.
And we talk about this before. I look at that and say that's selling in the 2850 call. That's not in my risk wheelhouse. It's outside of it. But I look at it and I know you do things like this, and it's less risky than just being short the market right here. And I understand that. If you're willing to be short at 2850, then I think it's a fine trade. And are you going to hedge it at all?
I am. I'm going to hedge it with some micros potentially if it starts to go against me. And it's not that far along in advance as far as in the future, right? So there's not a lot of time where the market could rally. The market doesn't have a lot of time, I should say, to rally against me to where it does expire on Wednesday. I can hedge that with micros. And if it breaks that key 2800 level, I believe the shot at filling out that put spread is nice.
Right. Speaking of micros, I'm looking at buying the June micro, MES, at 28.30. Now, when we just said we're trading at 28.22, I sometimes stop in the futures trade. So as it goes a little bit higher, set a stop to buy it at 28.30 with a target of 28.80 on the upside, 50 ticks, and a stop out at 27.95, which is below that all-important 2800 level that we've been looking at so much. So this risks 175 to make a potential 250. The beauty of the micros, you can widen it out a little bit and sleep at night because it's less exposure.
Well, you have no trouble sleeping at night, I've heard. But regardless of that, I like the levels for 2 reasons. 2880 is a great level on the top end of things if it does continue to rally as far as the ES goes. And then certainly in the bottom, as you mentioned, that 2800 level, it sometimes overshoots and then bounces anyway. It doesn't have to be right at 2800. That's another great stop to have in if you happen to be wrong on your position.
With the short answer, are the tariffs the biggest story? Is the Fed the biggest story? Or are they both related?
Yes.
They go together, right?
Well, they're both related, and one influences the other in one degree because we've seen the Fed commentary reflect that.
Agreed. Thanks for joining us on Market Movers. I'm Jim Murio, where we are helping to make you a better trader.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.